Welcome to Money Talks. My name is Michael Campbell. Money Talks is brought to you by Solera Club. Solera Club is a royalty-based investment. That means that you as the investor get paid first. There are no fees attached to it, and it's in the tech sector. For more information, go to soleraclub.com. Let's see, I'm going to get my list out here. Increasing civil unrest, check. Rise of third-party politics, check. First exposed, and then the decline of the establishment media, check. Demise of the European Union, check. Donald Trump wins Republican nomination, check. Trump defeats Clinton, check. We're watching every major theme discussed on Money Talks play out. And if you're interested, I'll tell you the next one, the pension crisis. To the U.S. election. My first really angry email regarding the U.S. election happened in June in the aftermath of the Brexit vote, when I said that the anti-establishment movement is gaining such momentum that if I had to bet, I would put my money on Trump. And you should have seen some of the emails just a few weeks ago when Martin Armstrong said that his computer model was pointing to a Trump victory. Now, I suspect that these people don't know the difference between their own opinion and analysis. I hate to be the one to break the news, but this election was not about you, and it was not about me. Our opinions make no difference whatsoever. And that's really tough, by the way, for the it's all about me generation to swallow. But it's easy to verify. I'll give you an example personally. You know, every stock I ever bought, my opinion was that it should go up. But sadly, and at times expensively, that didn't happen. My opinion made no difference. And I think it's a pretty safe bet that reality has not always followed your opinions either. So what's important here? Well, the main theme that I continue to talk about, the primary trend impacting your finances, economy, and politics over the next decade, actually maybe up to 15 years, is the loss of confidence and the rising distrust in government. And that's just what we saw in the U.S. election. That proved to be an impossible theme to understand for virtually everyone in the mainstream media because they're part of the establishment. The U.S. election was just the latest example, but was also one that showed the extreme establishment bias of the media. They bought the Democrats and Republican elites' agenda, hook, line, and sinker. They weren't fazed a bit, for example, when the Democratic elites decreed there would be no competition. There'd only be one choice for their nominee, Hillary Clinton, the result of a backroom deal in 2008. Yeah, I know Bernie Sanders ran, but he was an independent, literally, until he filed his nomination papers. And then when he proved to have staying power, the Democratic National Committee undermined his campaign to such an extent that the head, Debbie Wasserman Schultz, was forced to resign. Didn't become a big story in Canada because it would hurt their narrative. And then the press didn't even blink when she was immediately hired by the Clinton campaign. Maybe paid off's a better word. But the relentless revelations of lies and unethical behavior of Hillary Clinton and even possible criminal activity in the Clinton Foundation barely rated a mention. Yet only one newspaper, the Chicago Tribune, agreed with us on Money Talks that neither candidate had the character to be president and was worthy of our support. But as I mentioned on more than one occasion, what we witnessed with the Clinton campaign and the media commentariat is either profound arrogance, everyone thinks like me, or maybe they're just so out of touch not to understand the plight of so many Americans. The most telling moment, and I think the biggest mistake of the campaign, was when Hillary Clinton called Donald Trump supporters deplorable. That was not a slip of the tongue. I believe she actually believes that. And again, that didn't make the progressive left that dominates the media even hesitate. I think Money Talk's probably the only outlet that mentioned that several times. Because these people have been marginalized, and they fought back. A while ago, I said well-known leftist Michael Moore had his finger on the pulse far more than anyone in Canada, like the Globe and Mail's pathetic coverage, or the 100 major newspapers that endorsed Clinton. In the aftermath, he said, in quotes, "Everyone must stop saying they're stunned and shocked. What you mean to say is that you're in a bubble and aren't paying attention to your fellow Americans and their despair. Years of being neglected by both parties. The anger and the need for revenge against the system only grew." Bernie Sanders agreed. He said in quotes, "Donald Trump tapped into an anger of a declining middle class that is sick and tired of establishment economics, establishment politics, and establishment media," end of quote. Well, I continue to say, welcome to the age of consequences. I want to be clear, I never thought a Trump victory was necessary to confirm what I'm looking at, which is the decline in confidence in government. This trend has another 15 years to run. So what I was looking for was whether or not there was an increase in the number of people willing to say screw you to both the Republican and Democratic Party elites since 2012, and the answer is obviously yes, because they have in spades. And both the Democrat and Republican establishments will never be the same. And as for the mainstream media, I've come out of this election and the multiple revelations of direct collusion between members of the mainstream media and the Clinton campaign with a new level of distrust. And I suspect I'm not alone. Well, there's so much more to say about the election, there's not much point. We stopped listening and discussing issues, especially politics, a long time ago. A lack of respect for differing opinions is what fuels the divide that is the underlying motivation for this week's violence at some of the anti-Trump protests. But I suggest it would have been the same, just different people, if Clinton had won. For all the talk about diversity, we show absolutely no tolerance for diversity of opinions. I mean, come on. Think about this. People like Democratic Senator Sheldon Whitehouse and David Suzuki want to put people in jail for questioning even the smallest detail of the global warming agenda. On university campuses, they threaten violence to prevent people like Condoleezza Rice and Ayaan Hirsi Ali from speaking. Come on. This is the underlying cause of one of our main themes. Yeah, we see the decline in confidence in government, distrust in government, but there's another one, the rise in civil violence. We've been talking about it since 2013. And it brings me back to the line that I said in the beginning of 2015. Welcome to the age of consequence. What's happened in the U.S. election is not a fluke. It was not by chance. The trends were predictable. Maybe not the exact outcome, but the trend was predictable, and there's so much more to come. I'll take a break. I got Michael Levy on the line. Obviously, we're going to talk a lot about the U.S. election today. Victor Darham, I want to hear his take on it. I also want to hear what Ozzie Jurek has to say about the impact on real estate investments. We're going all over it. Don Violo at the top of the hour. Stay with me on the Money Talks Network. You're listening to Money Talks. I got Michael Levy on the line with me right now, obviously watching, just like you were, every moment of that U.S. presidential election, now the aftermath of it. Mike, I just wanted to, get right down to sort of the economics finance of this, because there was so much focus on the personality. Donald Trump dominated this campaign right from the get-go with his personality, his, I think at times, reprehensible statements. But we'll leave that aside and talk just about, okay, what now, kind of, when we look at going forward economically, financially. What's your first blush on that?
Well, Mike, I really agree with you, as we have to put the emotion aside, because the reality is that he's going to be president and having a majority House of Representatives, a majority Senate, and I think it behooves us to take a look at where he's going, what the economic direction is, and I think I've got 4 or 5 things that stand out, but the number one in my mind is repatriation of U.S. offshore corporate profits, and those are the profits that major U.S. corporations earn overseas, don't need or require for their overseas factories, their overseas production, but didn't want to bring the money back to the United States and repatriate it because of a 35% tax rate. Trump is talking right off the bat, one of his first things that he may legislate is the repatriation of those U.S. corporate profits, and not at a rate of 35%, but at a rate of 10%, and that could have a huge impact on the U.S. economy, because, Mike, it's estimated about $500 billion, somewhere about $500 billion, could come back to the U.S. and then either be returned to shareholders or put to good use by American companies, which will give a boost to the U.S. economy.
Yeah, I think that is the big one also. I mean, $2.4 trillion coming back into an economy. I mean, economies ultimately become about money and people. If you're attracting both money and people, you're going to do well. And that could be just a major move. Also, I think that's part of what stocks are reacting to, with this 5-day gain that we've been witnessing here after the initial sell-off. So, yeah, I think that's a big one. And I guess Canadians, people are going to talk a lot about NAFTA, but I think you got to look at the Keystone Pipeline, as we just heard on our news hour.
Mike, absolutely. And that was, again, you see, to me, he's going to go to Congress with a couple of items that are going to be easy for Congress to pass, and that is going to set the tone. One of them would be repatriation. The other one would be revival of Keystone XL, which the House wanted, House of Representatives, Congress wanted, and President Obama actually vetoed. So revival of that would carry, listen to the number, Mike, once it's built, about an $8 billion pipeline, 830,000 barrels a day of Alberta bitumen and U.S. oil that it would pick up along the way down to the U.S. storage area in Nebraska. And all Trump is asking for, and I'm sure Keystone will be glad to give it up, is a piece of the profit in order to make, and I'm quoting him now, to make our country rich again, but certainly a reaction from Americans, and especially those that voted for Trump, that reaction would be entirely positive.
And just to put that in perspective, if those are the numbers, we're looking at about $12.5 million every day back to Canada, because people have to remember, our Canada Select, the oil coming out of Alberta up there, is done at a discount to world markets. So the whole idea of Keystone or the other pipelines is to get Canada to get world market prices. So it's about a $15 discount, depending on what the price of oil is, of course. But that, just at today's numbers, you're looking at $12.5 million a day. What's that? $4.5 billion a year. So it is significant. So that will play another. Let me. Sorry, Mike, go ahead.
No, you go ahead. I'm sorry.
Well, just very quickly, what are you expecting? And I mean, this is a ridiculous crystal ball question, but are you thinking you're going to get the Donald Trump, the bombastic guy who seems to say anything that just pops into his head at a moment, or we're going to get a guy who must have had some level of pragmatism, to build? It doesn't matter if they're successful or not. I mean, you need some level of pragmatism to be in business the way he has been.
Mike, absolutely. And some of the things that we're reading and hearing above the rhetoric that's going on, and I have no comment on your program on the rhetoric. I have some deep-seated feelings about the man, but I'm trying to put that aside for our listeners and just look at the economic end. He's probably not going to dump NAFTA. He's already said that. He'll tweak it to appease American blue-collar workers. He's not going to stop trade with China. No country, major company would stop trade with China. It's in the best U.S. interest to cooperate with China. And you know what, Mike? The fiscal deficit that he was talking about during the campaign would have been about $9 trillion had he gone through with his over-the-top scenarios. He's going to have tax cuts that are going to affect U.S., and it's going to affect government revenues, but it's also going to be positive for the country because it's going to give people and corporations more money to reinvest. And maybe they're looking at a $2 trillion deficit over 4 years, which is basically something the U.S. can live with. So I think we're going to see a lot more pragmatism as he goes forward, dealing with a Congress that is conservative and will go along with what he has to do. Certainly Trump the buffoon is going to continue, I think, to make his appearances. But on an economic level, I think that he's going to surround himself with people who are going to at least try and direct him in a direction that's going to be positive for the U.S.
Well, we'll have so much more to talk about, Mike. Go out and have a pleasant weekend.
Thanks, Mike.
Stay with me. I got a big fat idea next with Patrick Ceresna, Chief Market Strategist, Learn to Trade Global. Stay here on the Money Talks Network. Let's get to the big fat idea immediately. Patrick Ceresna is Chief Market Strategist, Learn to Trade Global. Patrick, what's the big fat idea?
Well, Michael, thank you for having me, and I look forward to seeing many of your listeners during our West Coast tour next week. My big fat idea is we're selling options for income on the beaten-down pharmaceutical companies. In this example, I'll be using Bristol Myers, but similar opportunities exist in many of the companies in the space, such as Pfizer, Abbott, Merck, Johnson & Johnson, and even many of the biotechs.
Okay, so let's get into that a bit. So I guess you first of all have to be comfortable with Bristol Myers. You're giving that as an example. I want to make clear on that. You have to use an example. So that's Bristol Myers. Those pharmaceutical companies have taken a beating. Is there any impact of a Trump victory on this?
Well, absolutely. The drug companies have been badly beaten down in price, due in part to the political backlash from Hillary Clinton's and Bernie Sanders' presidential campaigns and the ongoing Department of Justice investigations into drug pricing. I feel with a Donald Trump victory, a new majority Republican government, and powerful drug lobbyists, there will be at best modest changes in drug pricing and regulation. I view this as an opportunity to buy low and add positions in a sector that now has most likely marginal downside risk in the stock prices, which is an important consideration when opening new covered call opportunities.
Yeah, now obviously there's a number, you guys do this and you're holding seminars coming up, and I'll give some details on that. You can go to moneytalks.net to register. These are free seminars because I think you just have to take advantage of some options. So there's lots of strategies you can use, but let's come to the one you just mentioned, a covered call. Give us an example with Bristol Myers of how that would work.
Absolutely. Well, there's a number of option strategies you can use to create income, such as selling puts or credit spreads, but I'd like to propose a simple covered call strategy to profit. In this case, we would be buying shares of Bristol Myers around this $56.50 area where it's currently trading, and we're selling a covered call out to June at the $62.50 strike price, which is about $6 higher than where the stock is currently trading. That option's bidding $2.20. And so with the combination of the covered call and the company dividend, you're generating an annualized cash flow at a pace of about 10%, while leaving over 10% upside potential in that $6 for the capital gain.
Yeah, and I just want to be clear. So you buy it at $56.50. You take in $2.20 if you give someone the right to buy it from you at a higher price, in this case $62.50, a 10% gain, as you say, anytime up until June. But you still collect the dividends and you keep that premium. That's how you get the over 10%. So that's one of the reasons I think in this low yield environment, I think people have to learn about this stuff, and I know I've been saying that a long time, but if common shares of a big company are appropriate for your risk, this is something you just have to look at it. Let me just finish. We only got a couple seconds here, Patrick, but are you finding more people taking advantage of this kind of thing?
Oh, absolutely. And because at this stage, it's so hard to find income in this type of market environment.
Yeah.
And bonds are paying almost nothing. Dividends are modest at best. And you have to go out the risk spectrum to find reasonable income. And so learning how to use options as a tool of enhancing your cash flow is a very important strategy that investors need to learn about.
Absolutely. Well, thank you for taking the time. I'll give the details where they can get the free seminars coming up starting next Saturday in Calgary and Red Deer.